The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 13th day of July. My pleasure to be here with the Dow up 82 at 25,007. The E-mini, as you can see here in the left side chart, is in a new leg C to the upside. The 120-minute chart, there it is. 120-minute chart made a peak D. Chapman wave left side, right side price time match, cup formation. Broke out above it. That's actually the cup and ladle formation. Spirals above it and goes to the 2807.25. Peak D was at 2797 times 3, 2797.75, back on the 10th and 11th. Now it comes back and tests it. That's the methodology in this Chapman wave cup and ladle formation. There should, in fact, be higher prices to come. That's the way I'm looking at it. And I know I had just one or two questions saying, when is the downturn going to be resumed, and how come? Actually, one statement wasn't a question, was a statement. Radio show, no conviction. Bull, bear. Simply changes wind direction based on the market current state. If Dow is up big, Basil a bull. Market down big, the Basil bear comes out of the cave. Getting ready, really old with no conviction. Kevin. So Kevin, if you want me to make a statement not based on the technicals, then you've got the wrong guy here. The way I'm looking at it is, I spoke about this. I said this is a bifurcated market. There are some indexes that are going to highs. There's some indexes that are struggling. But at the same time, I said that there is both the Chapman wave trend gauge, which has just been a phenomenal technique over the last 10, 12 years in a success rate. That's just my reading of Richard Arm's trend index. It's got nothing to do with his index, really. It has to do just with the numbers. Gave me a signal 2 days ago that there should be a sharp move within 2 days in the S&P futures, 9 to 11 points. What I was saying to myself is, if we are so close to the previous high of 20, let me go to the Dow since that's what we're looking at. If we were so close to there it is. In the 120-minute chart, we were moving up. Oh, now I've got to go to 120. I should have left this for later, being Technical Friday, but I'll do it now. We're getting so close to the left side resistance with the MACD still strong. That was in the 24,850s, a little bit, maybe around about there. That it seemed to me, if there was a spike to the upside, that would help. There's a 120-minute Dow chart. It would really help the daily. Why? Because the daily technicals right there, the stochastic finally had broken above the 28-30% level, was starting to rally strongly. The MACD had crossed positive. I can't deny my indicators. They were saying instead of pulling back, they were acting very well, which is the reason why I said for subscribers, as you know, that we were majority we were looking at the bullish side of positions. We had more longs than shorts. We had taken off a lot of profits in the shorts, just kind of holding on there to one in particular. And that's kind of what I was looking at. So all I can say is, I know that you would like some absolute clarity that I'm saying Dow is going to, it's at 25,000 now. It'll be at 30,123 on December the 17th, 2018. Or I'm saying, Dow's in a bear phase, and that M formation, which I've said is a containment area, it is a rectangle formation. And that rectangle formation can last a lot longer than your patience. And what I've been saying is we've been correct in identifying many of the positions, really correct in getting some 15 to 20% gains in some of the ETFs. I just do the best I can. Okay, so we're in leg C in the Dow, and because the stochastic, I said, as I said this morning, because the stochastic is very strong in the 80s, now it's at 89%, I have to consider we're in a buy mode on the daily chart. We've just gone to a buy mode by breaking 24,945 resistance. This is a blue leg C, not gray, but blue, meaning that by next week we should be at least testing a leg D to the upside. That's all I can do. Yep, I apologize. On the weekend, I really should have said Monday. Regardless, I'm seeing a bounce here, and the bounce could have legs. I thought I didn't want to have a trade of 5 to 7 sessions or a week. I wanted a trade of longer duration, and I did not switch us from short the Dow to long the Dow. We're still in a profitable position. That's the way it is. I'm sorry, that's the way it is. Pretty damn good indicators. That's all I can say. Now, as far as the Dow is concerned, up 98 as we speak at 25,022. What's really important about this is the MACD is still expanding, and the stochastics at 89.79. That's good. On-balance volumes lagging a little bit with the RSI, but they are rallying. Nice action, still within the contained formation of the M pattern in the weekly chart. Monthly chart, as I've said before, in all the indexes, still pretty darn good. All right, now let's get to the numbers. We'll do them quickly. Here we go. S&P is up, not as strong as the Dow. It's only up 0.16. Dow's up 0.37. And the S&P is at 2802, up 4.37. It, too, has started a leg C in the daily chart. But the difference is it's taken out the last high of 2791.47 that peaked either. So the very sharp slide from the 2791s to the 2685s, 2691 level. Okay, so right now leg C up, leg D in the weekly chart. That's changing a little bit because it's starting to pierce resistance, and the monthly chart is still good. Okay, here we go. The QQQ right now is up 37 cents, up 0.21%, 179.83. It is in leg D, a little bit more extended, but it can still go to an E or an F. At an all-time high in leg D in the weekly, leg E in the monthly, and the IWM, which had been lagging, right now is up 0.05 at 168, up 0.09 cents, lagging, failing. And this is part of what I'm looking at here to say not everything is in sync. And that's really the issue here. And that's what makes it difficult if you're in the wrong sector at the wrong time. All right, let's get on with it. Parameters to watch under 166. I'd say for the IWM really starts a deeper correction. Right now, it's just correcting in a high level. Okay, gold. Gold right now is trading at -3. Gosh, every day I got to say minus. At 1242, it doesn't look good. 1380, 1238 was the low that it had to test, and now it's tested it, but it's above that. It's at 1242.7. Watch that 1238 support. If it doesn't hold, that's very negative. Weekly chart is still very negative. The dollar, which we are still long. I'm not complaining about our positions. Look, the dollar is up a penny at 94.81. It's holding very nicely in the mid-94s. And that's part of the story that we're looking at, that money seems to be flowing more into the dollar than the other currencies. Hey, look at the USD JPY. That is amazing. Look at this move to the upside. Oh, they in the daily at 112.42. Very nice.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right. So I want to get to a question here. It's quite a detailed question. I think it's a pretty good question, but I'm going to also do some warning about it. But let me finish this here. I had a quick question about Click, which is Kuliker and Software Industries, designs tools for semis. Question is, where did the question go? How would you handle Click if you were long, Basil? Hold on or sell some when it hits the high? Will leg C in the weekly make it a new make it leg C? So it made a high of 28.71 back in November of 2017. Pulls back to to about 21. So it's about an 18% correction. And now it's almost at the high. 28.71 is trading at 28.39. High today is 28.49. Two things I'm going to say is congratulations. You held on. It was a brilliant move. Really, the last week has just been spectacular. Last week and a half going from the 24s to the 28s. Here's my recommendation, because you are a longer term buy and hold. I don't want to be messing with it. I'm going to say to you, if it goes to 28.72, that starts another leg in the monthly chart, and I'm not sure whether this is a B or a C. Actually, it looks like it can only be a B. So it's a G/B. What I am going to say to you is two things. One is at 28.39, you could take some off now and hold the rest. That's kind of what your question was. Or you could take some at 40 cents higher to get the new high, fine. What I am looking at here is that the power of this move with a stochastic holding steady at 91% is suggesting to me that I would rather see you as a longer term buy and holder, put in a stop at 27.39, $1 lower, rather than getting, $1 lower rather than getting $1 higher. And then treat it as a trading stop. But if it goes to 28.72, make that trading stop $1.25. I'll explain why. Because the parameters that I'm looking at here suggest that it could go to, it could go higher, it could go to the 29s even, pull back. But at this particular level, it might make a high-level consolidation, have 2 days of pullback. All those people that either are short or have missed it are going to say, hey, this is fantastic. I want to get in. I'm going to start a position here. And that could even push it into the 30 level as you're still holding this position, so it's only a big deal, it's a dollar, but by then, if you have your 27.34, 27.50 stop, as I'm saying now you've garnered quite a bit more points. And then I'm going to say to you, okay, as soon as it starts to stall, take some money off and then immediately dedicate that particular money to that particular stock and just put it aside and say if it comes back from 28, from the 28s or 29s, if it comes back to the 28.20 to the 26.50 area and holds there for about a week or two, that might be where you want to put it back. And then what you've done is you've garnered 2 extra points. It could certainly be 3, could even be a little more. You've garnered that kind of extra profit. That's going to give you a cushion. It's also going to allow you to add back if this turns out, and we'll do more studying on it over the period of the next few days to a week, and see if this is really leg B in the weekly chart, going to an all-time high. That's really bullish. That means when you put the money back, you're now going to put more money back than you had before. That's kind of the way I'm looking at it. So 2 ways: you take your money right now, 28.42, messing around for $1 maybe is not worth it, but you are a longer-term position play. If this was a shorter term, you were in for short to intermediate, I'd say, hey, take money now, take it off. You can dedicate it back to that same particular stock later. I'm saying, no, this is a stock that I'm going to pull this back. This has been around forever. I mean, I remember seeing click and clack. You remember there's a CLAK, I think it is, and a KLIC. This is KLIC, 28.43, up 72 cents. Forever. This is a monthly chart. Let me just squeeze this, squeeze. Oh, look, I'm still going to the 1980s and I'm squeezing. I remember this forever. And the reason why I remember it is here in Boston, we had these 2 brothers who had this auto show every Saturday morning. I listened to it forever. Even if we're traveling, whatever, I'd always get to hear it. Click and clack, they were called. The Maliazzi brothers, I think they were, here in Cambridge, Mass. And they were funny as heck. One unfortunately died. All right, so here we go. Let me just finish this now. I just want to show you something. So I want you to go to crude oil. Crude oil is struggling. Crude oil is up 56 cents. Took quite a bit of a beating after a spectacular move up. It's a 70.88. I think it's kind of stuck here. 72.50, 73.30 maybe is the resistance. It better hold 68, otherwise it's in real trouble. Okay. And then TLT, just real quickly, TLT right now is up 26 cents. Trying to test the previous high peak E. It's saying to me that yields are stuck in a range, nothing much to see here right now. All right, here we go. Hi, Basil. Would you please let me know your thoughts on the following? 1, can silver rally without gold? And the answer is, it has done so previously, but unlike the dollar and gold, which have an inverse relationship, but periodically for 4 to 6 weeks, a couple of times a year, a few times a year, they'll move in the same direction, not the same percentage, but the same direction. Silver tends, and I'll show you right now, I should actually do this. I wonder if I can do this right now. Do I want to mess up one of my charts? Not that one, this one here. I think, whoa, don't mess that. Yeah, okay, here we go. I think this is the one. Yes. So yeah, let's just do this. SLV, and which is that? Is that blue? No, that's yeah, blue. And GLD is gold. What the heck is the black? Oh, that's the semiconductor index. I'm going to keep that for now. While we look, I forgot I had 3 on this particular chart. You see, silver had a spectacular move back in 2010. Gold had a terrific move, but silver played a rocket ship catch up and made the Eiffel Tower straight up, straight down, uppercase A pattern, and came back. Didn't break the low that was made in 2008 on the SLV at about 15, wrong one, at about 845. Yep, but you can see, so it's the red and the blue. So here's my answer to you. For a short period, they can go against one another, but I'm only talking 10 days, maybe 2 weeks. Generally, you're going to be looking at them going in the same direction. Do they have the same percentage moves? That's very different. So I'm saying to you, No, yes, they always move in the same direction, especially if you're looking at longer-term monthly charts. No, they can have very different percentage differences, as you can see right here, where silver goes from this level right here of somewhere in the 19s and screams to an all-time high, to a high. I think 1980, I think, had the all-time high. So it screams to the 48 level. That is a huge move, right? A double. Gold didn't do that. So I'm going to take the break, and then I'm going to answer you, because these are questions. Your second question is, I'm considering buying the USLV. Do you think silver is near the bottom, or does it have prior to reaching the bottom? Thanks for taking my question, Robert. Robert, I don't like the USLV in your case. In a short term, yes. I'll be back. I'll talk about it.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, so I've got Mike on the line. Mike from Ormond Beach. How are you?
Great, Basil. Basil, I'm into Coke, and the one that I'm in, it's trading symbol COKE. And it's got a price range, like right now, right around 136.
So you see, I looked at this. I saw that you were looking to call on Coke. I'm coming back to Robert in a moment. I just want you to get to Mike right now since he called in. Robert, I'll be back because I don't want you using the 3 times long position for a very long-term buy on silver. We are owning a 3 times short And even though the price hasn't even, the core hasn't gone to the original shorting price at the exact high, no, almost off the top, it's not, there's erosion every single day. So you really have to be perfectly correct to be able to really make money on a 3 times long. You can, but there's erosion. So I'll talk about that in a moment. So Mike, I'm looking at this, I'm saying I remember this bottling company. It was a different symbol from way back. And I remember even owning it at one point. It was really, if anyone's looking at Coca-Cola, for some reason, the bottling company at one point was actually doing even better than the price of Coca-Cola. I was really surprised to see that this was Coca-Cola bottling. Maybe I was looking at a bottling company, Coca-Cola, that was in Mexico, whatever, but it had a different symbol. But this one does go back to the 1975 period, so it must be the same one, just a different name. So what I'm looking, so the question is,
okay. Well, the question is, we made a top yesterday, and I'm not sure the wave count. And looking at it on a weekly stochastic, I'm in from like 125 or something like that a share, and it looks to me like my weekly stochastic is starting to roll over. So do you think this has further to go on the upside with your wave counts, or do you think now's the time to get out?
So are you long? You say from
yes,
121?
Yeah,
okay.
I'm long.
So I just wanted to clarify. So if you're long from 121, the way the pattern has worked, it's made these in the daily chart. It's made higher highs and higher lows. It's making a peak E as we speak because it's below yesterday's high of 139. Was it 130?
138.95.
138.96. All right. So what we're looking at here is the MACD is still good. The stochastic is pulling back, still at 82%. That's good. On balance volume is pulling back. Daily relative strength is pulling back. So because you're in at 121, you've got a lot of leeway.
125, I think it is.
5. Okay. So I don't really want to say to you, oh, Mike, this is it's rolling over. It's rolling over. What I would say is that that huge smash, it's really a smash to the downside back on the 11th of May when it was trading at 170, takes a dive and goes to a low of 130, round number, and then still to boot goes even lower, it goes to 125.08. You got it just off the bottom, I guess. That's great. What I'm going to say to you is what I would do, because the monthly chart is not very good, the weekly chart is a good kind of a dead cat, not even a dead cat bounce. It's more like I just opened one eye to say, where am I? That weekly chart, the daily chart is saying, I've had a fabulous move to the upside. It's been a struggle, but it's been a real nice move from the 125s to the 138s. Now it's time for a little digestive phase. So what I'm going to say to you is, I don't want to get in the way of your thinking, but I do want to you see, if you did options, I would buy a put, a 135 put, and I try to hold on to this position.
Yeah, I'm not in options. I just don't own the stock.
Forget that. Okay, good. Don't even think about it if you don't do it. So what I'm going to say to you is two things. One is this is where I would say to you at 135.85, because it looks like there's going to be a little bit more of a pullback to give a test of the 134, 133 key support level. I would take something off now. This is not a position where I take it off ready to put back. I'm just taking it off saying my goal was a rally. I got the rally. I don't know if you had an upside number, but the 9-period moving average is at 135, 138.40. It hit that. Now it's pulling back. It's done its job. Now the other part of it is the 2/3. What I would say, maybe take off a third. The other third, I'd have a stop of about 130, between 134.20 and 133.70. Why? Because if by Tuesday of this coming week or Wednesday, it really has just tested the 135.50s of the 9-period moving average, no, the 14-period moving average, and then has a bit of a bounce, that's not bad action at all. So, but the other is because you were in so nicely, I would try to keep a call, because this is trying very hard to attempt to make a bottom, a tradable bottom. And we won't know until it makes a new high, probably in the 139.50 to 140.20 area. So
that's where I thought That's actually where my sell order is, at 139.97 or something like that.
So, okay, now that you've articulated that part of it, I'm going to say to you, now I'm even more assured of what I think would be a good plan, and that is to take money off now.
Okay.
And let it hold. If it holds through, call me again Tuesday or Wednesday. Let's see where it's holding. If it's holding quite nicely, I might even say, you know what, it's holding well. The stochastic's still above 80%. The MACD's still good. You might want to put that money back and treat it as a trading position. You've got a core position. You've got a 1/3 position that is where you still want to be having that 134.20 to 133.80 stop. But you could have a trading position that kind of makes you money in the meantime while you're waiting for that potential move to the upside. It can do it, but it has to do it fairly soon. It has to have the same rhythm of 3, 4, 5 bars to the upside, 3, 4 to the downside, higher low than it was on the previous low, higher high. That's the pattern you wanted to continue doing. So I hope that helps you.
Yes, it does, Basil. Thank you very much.
Thank you. Very good. Congratulations. That was a nice trade. You needed guts to do that. You needed skill and guts, and you did it very good because you got it right off the bottom. Congratulations. Thanks for calling, Mike. Have a good weekend. So, folks,
part of it was from what I learned from you. Thank you.
Oh, thank you. Thank you very much. I appreciate that. So, folks, we're going to go back to Robert because I've had a couple of people just ask me this kind of question periodically, and I'm saying I don't see yet gold and silver really powering to the upside. So, first of all, Robert, this is my opinion, you won't get a sustained move in gold unless both gold and silver are in unison moving up, having 3 to 4 days of upside action, 2 days to downside action, and then making higher highs. You need that rhythm before the tide is going to change. That's number one. Number two, if you're trading it, I would go, just be patient. Look, you've been patient this far. Stay with the SLV. The SLV trading at 14.91, 1-to-1 iShares Silver Trust. Get a feel for how silver is going to do. When and if you see the SLV trading for 10 days above $15.55, it's at 14.90. And now I'm going to make it trading above $15.70. The 200 period exponential moving average. I think then you're going to have a change in the direction that is more long-lasting. So start off with the SLV, and I'm just going to say, let's hold up even here. I'll look at it again Tuesday of next week, and we'll do the same analysis.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So Paul says yes, and it's also a new moon. This won't happen again until 2080. Wow, 2080, huh? All right, well, that's the way it is. Nothing I can do about that. And it is Friday the 13th. Okay, that was a question here. And then a couple of the usual questions. So now, I do want to go back to this just for one moment because it's really important for William. Is that William or is that Robert? Sorry, Robert. Robert, the gold has gone below the 1238.80 level. It's in a leg F to the downside, 6th lowest trough. What happens at this particular point, the MACD is bounced, the stochastics bounced really nicely, but the price hasn't really held, but there is a little bit of a divergence here. So this is what I'm going to say to you. Because we're going back to the SLV now, because the SLV is doing exactly the same thing, with a slightly better candle pattern, those weekly charts of both gold and silver really have me worried, as well as the monthly charts. But on a shorter term basis, this is very important, and I'm going to try to do the whole thing very quickly. One is that silver right here, there's a possibility it could have a bounce. It could go from 14.90 to 15.11, the 9-period move, the 14-period moving average, and it could do that fairly quickly for 2 reasons. One is the USD JPY is in leg. This is the yen currency pair, leg E, very extended on a short-term basis, really good technicals. The EUR USD euro dollar currency pair is pulling back, but is holding pretty darn well considering everything that's going on. And there was a third thing. Oh, and the third thing is that I'm thinking here the SLV, and I'm going to recommend this to you because you're obviously watching this really closely. Now this is just for Robert because of the question, the way he asked it, the way he's focused on silver rather than gold, the fact that the weekly chart of silver is the monthly chart of silver is just a tad better than gold. I'm going to make this recommendation. SLV is trading at $14.90. I'm going to recommend for very little risk, but you've got to be prepared to take the risk. If you're just saying, oh, no, I want an up move with very little risk, this is a down move trying to pick the start of a basing formation that could garner more points to the upside if, and this is what I was waiting for, if the dollar, which has a candle, an inverted, this is not really, let's call it an inverted doji candle, so it's a hammer candle. Days young, anything can happen. But this is suggesting to me that the dollar, as I've been talking about, even though we're long from 90.07, it's only at 94.82. Very little pullback from the 95.53 high. The weekly chart is still great, but this is the chance where you can get a little bit of more of a pullback in the dollar. That should help you start to get a real good feel for how silver's acting to the market, how silver's acting to gold. So I'm going to recommend the SLV. Don't buy 1,000 shares. Buy just like a handful, just like you own one share or whatever it is. You just want to have your foot in the door. You want to see how is it going to behave, because then you won't have to ask me the question. You're going to get a really good feeling for when it's ready to have at least a bigger move to the upside. And I would just say to you at 14.90, even give it a point, 13.90, because it's just a tiny position, 100, whatever dollars it is. It's not that much when you're thinking of getting a USLV, which you could lose that in a split second. So that's what I'm saying. Tiptoe in, get a feel for it, get a real sense of, I own it, I don't like it, I do like it, it's acting well, it's acting badly. Oh my God, I should be down. Oh, look, it's up. All those surprise factors. Get a feel for it. I think you're going to learn a lot. So that's it. Now I've got a whole slew of questions coming in. All right. Thank you for the question. And I just hope that somehow I'm going to get you to really have the feeling for silver, SLV first, so that you're going to be able to add to it. And then you'll be very comfortable going to the 2 or 3 times long. It's fine. Dan has a question about NXP, a radio question, China. NXPI, it's the only one I don't think I have completely notated, if at all. I think I did it once, and then, oh man, ABCD, peak D in the monthly chart. NXP semiconductor trading down 36 at 108.03. This is not one of my favorites of the semis. It's done well. I can't complain. It's just one I only see it going on the ticker once in a while. I don't follow it. It's got a pattern right now that says it's just stuck in a trading range. So let me see the question. Hi, Basil. Would love your thoughts on ARWR. How did you get there? ARWR. What happened to the Arrowhead Pharmaceutical? Oh, Dan, I'm long since December 2016, and you're asking me? And hold at $8. $8 September calls from $2.25. These represent 40% of my shares. Many catalysts with this company, so I'm hesitant to sell anything, but I'm considering liquidating the options to offset cost basis of the shares. Always appreciate your opinion. Thanks, Dan. Dan, this is trading. You know what? A, B, C, D. It's just starting to stall. There's nothing wrong with it other than I think now at $16.09. Dan, I've got a feeling that I have to say to you, respect your intellectual veracity, the way you've thought it through. You must, not me. I do respect it, but you've got to respect it. I'm going to say to you, start whittling away a little bit at those September calls. It's a spectacular gain. I wouldn't get out of all of them, but just whittle away enough to make yourself feel comfortable. Let's look at this thing again on Tuesday. Give it a couple of days. I got a feeling that the 1566 9-period moving average and the 1510 14-period moving average are going to be really good support. I don't want to actually say to you, oh my God, this is fantastic. Get out, get your profits, stay. No, I think you've thought it through really well. The monthly chart is still it's vertical, but it still looks very good. Something's going on that's very good. ARWR trading at $16.09, down 32 cents. Follow your instincts. Start taking something off now. Let's follow it up again. Maybe Monday's too soon. Let's go to Tuesday. Let's look at it again Tuesday. I'm going to make a note of it. ARWR. Of course, this is the pencil that's not writing. Let's go to the pen. ARWR at 1609. Tuesday. We'll do Tuesday. Okay? But I think follow your instincts. Question about DE. DE is Deer trading right now. Deer is trading. Is it up? No, it's down 2 at 138.69. You know, this is more a China play, Deer tractors equipment. It's not just that. It's also the agricultural play, which just hasn't been working. But it also has this arch formation, which is testing the left side low. What's the question? Real quick. What is the... And DWDP. Yeah. Don't touch deer right now. I do. Next week is the week I want to start looking at Caterpillar and deer and all the others in this particular sector. Dow DuPont, DWDP, that should have come up right now. There it is. Dow DuPont probably also down. Oh, it's up 18 cents. Dow DuPont is chemicals, a much better chart formation, still not ready to move higher, but better than deer. I'll be right back because there's still a lot of questions. XRT, yeah, I'd like to look at the XRT and EF. Basil Chapman, Tiger News out.
Aerobics Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So let's just run a couple of things here in this very fine. Hey, folks, check out my opening call. Hopefully, you'll find it really, really beneficial to your actual position playing and just ideas and putting into practice what you can. I always admit when I do lousy stuff, and I did one trade that I said we should buy it in 3 different increments at 155, 145, 135, because in long term, this is the play of the next, it should be the play of the next few years. I just chickened out. We took a couple of little small losses, and and it did exactly that. It went down to the low 130s, and now it's at 151 or something. Well, we got back in. I just decided, you know what, I was wrong. This is a good-looking stock, and we started a position. I don't know if we can replay that same way, but it is. But anyway, hopefully my opening call is something that you can really learn from and benefit financially. Now, let's quickly run this. You got XAL. What's the question there? Question is, crude oil's coming down a little bit. Yep, the XAL is finally bouncing. We've got a leg C to the upside, coming off the bottom. This is going to be important because it's coming off the 200-period moving average in the weekly chart. So how sustainable is this is the question. I still think that the Dow has more to go. The S&P has more to go. The upside. IWM is the stalling factor here. It should have one quick burst of energy at some point in the next day or two. I think by Wednesday of next week, perhaps maybe even Thursday, that's when I think we're going to start looking for a downside reversal. Let's see what happens there. AXP, American Express. Remember yesterday we looked at some of the card holders. They're doing really well. They're off their highs. MasterCard is at its high yesterday, all-time high. Really good action. That's what's been helping the XLF a little bit. But the banks, the XLF itself, not looking so good. It's down 8 cents. It's kind of struggling. I think Citi came out with earnings, and they were a little bit disappointing, down $1.38. It's kind of stuck. In fact, we're out of our bank stock. What can I say? We have Bank America, took a small loss, and Monday they came out with earnings. What can I say? I wanted to tighten up. I just didn't feel like risk because yields are still in the lower range. So I don't know how that's impacting the financials. Whoops, the only thing I didn't do was XRT. Let's do that as we're about to go to Steve Rhodes. Folks, stay tuned for Steve. Stay tuned for David White. Stay tuned for Tom O'Brien. Have a great weekend. Yeah, it's just stuck. XRT, the retailers in the upper part of the range, but stuck. I'll be back on Monday. Have a great weekend.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.